If you click this video, you've probably tried scalping, day trading, or even swinging gold, and nothing worked consistently until now. This strategy is different, and I'll prove it. So gold prices fool traders every day. This particular market requires perfect timing. Most traders always seem to be too early or too late. Well, this guide combines multiple technical factors: trendline breaks, resistance support flips, and retests into high probability trade opportunities. So let's break down the key components and explore why this approach can be effective from a supply and demand perspective. This chart shows an upward trend line that's been in place for some time. This trend line represents a series of higher lows, indicating consistent buying pressure. However, the strategy focuses on the moment when this trend line is broken to the downside. A trend line break is significant. It suggests that buyers are no longer able to maintain the previous rate of price increase. When price breaks below the trend line, it often indicates that selling pressure is starting to overcome buying pressure. After the initial break, price often returns to the underside of the trend line. This retest serves several purposes. It confirms the validity of the break. If the trend line now acts as resistance, it strengthens the bearish case. Also, it provides a more favorable entry point for short trades with a tighter stop loss. And it often traps late buyers who see the pullback as a buying opportunity, not realizing the trend has changed. From a supply and demand perspective, the area just above the broken trend line becomes a zone of supply. Sellers who missed the initial move down are often eager to enter short positions at this level, creating additional selling pressure. The strategy also incorporates a key support level that has now flipped to resistance. This concept is powerful because it demonstrates a clear shift in market psychology. Previously, this level acted as support, meaning buyers were consistently willing to step in and buy at this price. But this area now acts as resistance, and this indicates that previous buyers at this level are now looking to exit their positions, creating selling pressure. New sellers view this level as an opportunity to enter short positions, and the overall market sentiment has shifted from bullish to bearish. The power of this strategy lies in the confluence of multiple bearish signals: the broken upward trend line, the successful retest of the broken trend line, and the previous support, now acting as resistance. When these factors align, it creates a high probability setup for a short trade. The confluence of signals increases the likelihood that the bearish move will continue, because it represents a significant shift in market dynamics and psychology. The retest trade is effective for several reasons. Markets often have a memory of significant price levels. When price returns to a previously important level, like a broken trend line or a broken support, it often reacts strongly. Also, many traders who missed the initial uptrend see the pullback to the trend line as a second chance to enter long positions. When price fails to move higher, these traders are forced to exit, adding to the selling pressure. At the same time, traders looking for short entries often wait for a retest of a broken level. This allows them to enter with a tighter stop loss, and the retest confirms that the broken level is now acting as resistance. Understanding why buyers become trapped above this level is key. As I said, some buyers enter long positions when price briefly moves above the previous support, thinking the uptrend is resuming. Other traders see the pullback to the trend line as a buying opportunity, not realizing the trend has changed. As price fails to move higher and instead drops below the entry points of these trapped buyers, their stop losses are triggered, adding to the selling pressure. And the realization that the trend has changed can cause panic selling among those who were previously bullish. From a supply and demand viewpoint, This setup represents a significant shift in the balance of power. We clearly have an exhaustion of demand. The break of the upward trend line implies that buying pressure, the demand, is no longer strong enough to maintain the previous rate of price increase. We also have an increase in supply. The area above the broken trend line and the flipped support level becomes a zone of increased supply. Sellers are more willing to enter or add to short positions at these levels. And this creates an imbalance. The confluence of signals creates a situation where supply significantly outweighs demand, leading to downward price movement. So this trading strategy combines multiple technical analysis concepts. It relies on a shift in market dynamics and psychology, as represented by the broken trend line and flipped support level. And the power of this method lies in its ability to identify areas where supply is likely to overwhelm demand, leading to downward price movement. Now let's look at a buy signal. This combines two key breakouts, a diagonal trendline break and a horizontal resistance break. This dual breakout setup can signal a strong shift in market dynamics, often leading to significant upward price movement. Let's start with the trendline break. In a downtrend, price makes lower highs and lower lows, and we draw a trend line connecting these lower highs. When price finally breaks above this trend line, it's a sign that selling pressure may be weakening. This break is step one of our buy signal, but a break alone isn't enough. After the initial break, price often pulls back to the trend line. This retest is important. If the old resistance, the trend line, now acts as support, it confirms the breakout. It shows that market psychology has shifted. Then there's the horizontal breakout. During a downtrend, certain price levels act as resistance. When price not only breaks the downward trend line, but also pushes above one of these horizontal resistance levels, it's a strong signal. The power of this breakout comes from its dual nature. You're not just seeing one type of breakout, but two. The diagonal breakout, the trend line, shows a change in the overall trend. The horizontal breakout shows that a specific price level, which had been holding price down, has now been overcome. From a supply and demand perspective, this setup is fascinating. The downtrend represents a period where supply outweighs demand. Sellers are in control, pushing price lower. The trendline break suggests that this balance is shifting, so demand is starting to overcome supply. The retest of the trendline and the previous resistance is a key moment. It's where old sellers, the supply, may try to reassert control. If they fail, so if price bounces off the old trendline, it shows that new buyers, the demand, are now strong enough to absorb this selling pressure. The break of horizontal resistance adds another layer. These resistance levels are prices where supply previously overwhelmed demand. Breaking through shows that demand has not just increased, but increased enough to absorb all the supply at that price level and push even higher. It's all about market psychology. During the downtrend, traders get used to selling at certain levels. When price breaks higher, many don't believe the move at first. They see the pullback to the trend line as a chance to short again. But if price bounces off the trend line, these shorts are now trapped. Their stop losses become fuel for the next move up. The same happens with the horizontal breakout. Traders who've seen price turn down from this level before may try to short there again. If price pushes through, their stops add buying pressure. And this brings us to trapped sellers. In the original downtrend, selling at the trend line or at resistance levels was profitable. As price breaks higher, these sellers start to doubt their positions. Each push higher puts more pressure on them. Eventually, they have to buy to cover their shorts, adding even more upward pressure. The confluence of these signals, the trendline break, the successful retest, and resistance to support flip, creates a powerful buy setup. Volume often plays a